and welcome to yet another eToro Hangout. Nimi Howard here. First of all, before we begin, I do want to apologize on the behalf of Mandeep and myself for having to postpone Lesson 6, but we are here today, back in action. Joined today is Mandeep Athwal. Mandeep, thank you so much for joining us. How are you doing today?
I'm okay, thank you. How are you?
I'm doing good. I can't complain. It's Friday, so we're close to the weekend. With that being said, before we get started, just a brief overview. Today is Lesson 6. We will be reviewing some trades. We will be going back and talking over supports and resistance, or as Mandeep mentioned before, supply and demand, and looking over Mandeep's overall strategy. So without further ado, Mandeep, the floor is yours.
Thank you. Okay, guys, let's start with the simplest thing, which is my trade. Nimi, can you see a chart on your screen?
Yes, I can.
Okay. Okay, guys, this is a euro-dollar trade that I was looking to take yesterday, and I've got stopped out of it. Now, there are two reasons why I want to talk about this trade. One of the reasons is because I want to show you the power of stop loss. And secondly, I want to share my strategy. Now, just because the trade failed does not mean the strategy doesn't work. Like I said before, you have to be consistent at trading to make money. So what I look at is a number of trades overall which are profitable rather than just one trade. Now, one of the reasons I want to share this chart with you is because I want to show you how my emotions were taken out of the game when I brought my strategy to the market. Okay, so as you know, euro dollar has been dropping in price for the last couple of days. We had a major drop yesterday in price. What I was looking to do was look at the daily chart and see which way the market was trending up. If you look at the euro-dollar chart, you will notice that the market is still trending up, and there is a support area around 134, which was previously resistance, but the market actually broke out of that area and now uses as a support. So yesterday I came to the market and I looked at the 1 hour chart. Now this is one of my intraday trading charts. I came and noticed that the market was declining back to a level of support or demand. So I marked off a level. Let me just zoom in so you can see it a bit better. Okay. Nimi, can you see this area here?
Yeah. Yes, I can. And before you get into it, I just want to make sure. You mentioned that this is a daily chart, correct?
No, this is a 60 minutes, so it's 1 hour chart.
So we're looking at an hourly chart. Okay.
Yeah, as you guys can see, the time is on the top here, a 60-minute chart.
Okay, great. Thank you for that.
The reason I said the daily chart is because that's my bigger picture chart. So I look at that to see which of the market is trending. And I'm sure you will agree with me that the euro dollar is actually trending up on a bigger picture.
Of course, absolutely.
Yeah. So the only thing I was looking to do was buy. So I'm not interested in shorting because I don't want to go against the bigger picture. So I was looking to go long on the euro dollar. So I was looking for an opportunity on a smaller time frame to see where I can enter the market. Now I found this level here on the 60-minute chart. It was at 134.81, and the range was on that candle between 134.81 to 134.57. Someone on OpenBook asked me a question: how do I draw my range? Now this is pretty simple. I look at the last candle. As you can see, this 1 hourly candle, I drew a line from the top of it to the bottom of it. Now if you do get a candle which is huge like this one, what I tend to do is draw a line on the open and also the line on the high. Or if it's a candle going the other way, then I will draw a line at, say, for example, at the open, and probably take about 25 to 30 pip high because that is my stop loss, which I stick to on intraday basis. Now, what I mean by that is I don't take any trades which have a stop loss larger than 25 to 30 pips, simply because then psychology starts playing up and also your position size starts getting smaller as well. So coming back to the trade, all I did was I drew my line from the top of the candle to the bottom of the candle, gave me a stop loss of 25 pips. Now, all I was looking to do was take a risk of 25 pips. I wasn't interested in what the market did. All I was interested in, if the market came in, I would be looking to move my stop loss to entry once the market broke out of this zone here, this range here. The reason being for that is because this is considered to be consolidation or basing, where the market is deciding which way it's going to go. So if the market came here and it was here, then I would be moving my stop loss from 34.57 to my entry, which was 34.81. Now, my first target was 35.41, that's 60 pips. Now, I spoke about this before, is that there is no point of you taking a trade if you're risking 25 pips to make 25 pips. What you want to be doing is you want to be looking to make at least more than what your stop loss is. I do agree with people who say sometimes one-to-one risk to reward is good, but what I do is when the market moves in my favor of my same amount as my stop loss. So for example, if this market filled me in at 34.81, from here, when the market moved up 25 pips, I would move my stop loss to entry. Now, you might wonder why I'm doing that. One of the main reasons is in trading, I want to be risk-free as soon as possible. So what I do, I eliminate my risk as soon as I can. Now, what happened is that when the market came in, it actually filled me in 34.81. You can see that my target one was at 35.41, with 60 pips away from my entry. That would give me more than 2-to-1 risk to reward. But what I want you to concentrate is look where my target or my final target is. My final target was 35.92. That's 111 pips away from where my entry was. That would have given me 4-to-1 risk to reward. Now, guys, and I'm sure Nimi, you would agree with me on this one. 25 pip risk to make 111 pips. Does that make sense? Do you think that's
20. I would get into this position absolutely. I mean, if my risk is at that point and my reward is at that point, I'm game. I'm in.
exactly? Yeah. Okay. So, guys, this is the power of risk to reward, and this is the power of 20. This is the power of stop loss. The reason I'm saying the power of stop loss is because I'm going to tell you in a second how the stop loss actually saved me out of the market at the same time. Now,
Mandeep, I'm
yeah.
sorry to cut you off, but while we're
No,
still fresh on this, you mentioned that somebody on the open book asked you how you draw your lines. Now let's say that our traders out there, whether they have the experience and knowledge or not, are looking at the same chart that you're looking, and they're telling themselves, "Well, I necessarily wouldn't have drawn my lines where Mandeep did. Does that make me wrong?" So my question to you is, because and we've spoken about this, I don't think every person draws the same support resistance
no,
lines.
they don't. No.
So for those who are unclear, that are looking at this chart right now and saying, well, I wouldn't have placed my lines there, my support resistance, entry points, so forth, does that make them necessarily wrong in this
No,
scenario?
no, it definitely doesn't. Now, when I talk about support and resistance or supply and demand, like this area here, what I call this is a event area. This is where an event took place and the market shot up from here. You could have drawn your line from here or from anywhere, as long as your lines are not drawn somewhere here or somewhere here. As long as you are in that event area, if you're out by 5 pips or in by 5 pips, it shouldn't make a difference to your trading, as long as you are within that event area.
Okay,
Does that
great.
make it clear?
Yes, thank you for clarifying that.
Yeah. So, for example, like just to clarify, so we've got a massive drop here in price. Now, if this market was trending down, we would be looking to short from here. Now, I could draw my line just 10 pips from the top to there, or someone else could follow, from here to about there. So they could have 30 pip stop loss. That's up to them, but we're both in the same zone. So we're both looking at the same area. One of the key things about trading is that you don't want to be going against the market. So for example, if the market is showing you that it moved up from here and you're actually selling here, I know this trade would have worked out, but you would have got lucky. It wouldn't be the wise way of trading. So what we want to do is go long where there is support, go short where there's resistance. So your zone might be different from mine, but as long as you are in that same area of trading as myself, then you should be okay. So hopefully I've clarified that.
Great, thank you for that, Mandeep.
Okay, so I just want to talk about my targets. As you can see, I had two targets, and I was looking for a potentially risk reward of 4 to 1. Now, my usual risk reward is anything between 3 to 1 to 5 to 1. This one, I was looking at 4 to 1. The reason I put my first target here is because we had a event area here, or resistance. So if the market did come in and started going up, we would have faced some resistance down here. So I didn't want to be taking all my position into risk if just in case the market came back. So what I usually do is if I had got filled and this market moved up here, I would have taken off about 60% of my position here. So which is called scaling out. So the market would have filled me up, I've taken my profit here. I would have then moved my stop loss entry just below this level. So I've moved my stop loss up, guys. I'm not moving it down, I'm moving it up in my favor. So if the market did come back, take me out, I still have this profit potential here. Now, target 2 was the same because the market is showing a swing from here down to here. So my profit target there was 111 pips and it was 4 to 1. So I decided I would get at the position here because that's where the market swung from. Now, this is the most crucial part of this trade. The market came to my level. I got filled at 34.81, but I got taken out at 34.57. I lost 25 pips. I was willing to take that risk because that was one, I think it was about 0.75% of my account. So it did not really affect me in the sense that, you know, it had a major effect on my account. However, if the trade did work in my favor, I would have been looking to take 4 to 1 on this. One of the most crucial things, and I keep saying this, is that you manage your risk properly. Guys, look how my risk was 25 pips. Market took me out at 34.57, and look what happened. It dropped further down for about another 75 to 100 pips. If I was someone who kept moving my stop loss, where would I have stopped? I think, Nimi, we spoke about this, didn't we, before?
Yeah.
And this is a example, live example from yesterday. Imagine if I was someone who didn't stick to his rules and started playing the emotional game and started moving my stop loss. So where would I move to? Here, 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 here. How far would I keep going? Guys, no one knows. If someone says to you they know when the market's going to stop, they're lying. No one knows where the market's going to stop. The market stops at resistance and the market moves at support. That is the only two crucial, and those are only guidelines. Market here, this market should have stopped here, but it didn't. It went through. So if someone said to you they knew the market is going to stop, even if I say to you I knew the market is going to stop, I'll be lying. I didn't. I'm looking at probability. The probability of this market was it's going to move up, but it didn't. But I had my risk worked out. 25 pips there. I was out with 25 pips. Loss, I don't mind because it's part of my business. Nimi, are you waiting to say something?
Like we mentioned and we spoke about this, this is one of the biggest mistakes we see a lot of traders make is adjusting the stop loss against them. And like you said, for those who think that at a certain level they know that the market will turn around, like Mandeep said, you don't. And it's a shame that you have a strategy. For example, you open a position with 5% of your account, and before you know it, because you continue adjusting your stop loss, before you know it, now you had invested 50-60%. It's a shame that we see that. As Mandeep just showed, you set your rules, you set your guidelines, whether it is you enter with 3%, 5%, and you stick to that. There's no reason to continue adjusting, extending the stop loss. Just you got stomped out of the position. Now it's time
Yeah,
to re-enter into the market again and make back what it is that you lost. But unfortunately,
exactly.
we don't see that. Unfortunately, we see the opposite, where traders
Yeah,
just can't let the position go, and we see it too often. As I mentioned, it's quite a shame. But
yeah.
um,
And I think one of the things about this is I'm pretty sure yesterday there would have been people who would have been moving their stop loss from there to there to there to there, and they would have gone there, and it was like, oh, look at this, it's now moving in my favor. But the problem is, you've just moved your stop loss 100 pips against you. If this market carries on dropping, you're gonna carry on moving until your account is
right.
wiped out. You know, and that's the last thing we want to do. So that's why risk management is very crucial. And I wanted to show this trade because everyone can talk about winners, but I want to, and everyone can talk about losers, but I want to show you exactly how I managed my risk. Although the trade went against me, I'm not bothered because that's part of my business. What I did was the right thing. I marked off my levels, market came, it didn't work out in my favor. Fine, I'll look for another opportunity. Tomorrow is another day. I don't want to be someone who's having sleepless nights chasing this stop loss here. This is ridiculous the way people trade, but this is how you should be managing a risk. 25 pips, look at that, 4-to-1 risk to reward. If you had got it, it would have been nothing.
So Mandeep, well, you said something right now that really caught my attention.
Hmm.
To live for another day, you have today. We did this trade. We got stomped out. Tomorrow is another day. Question about your emotions. How did you control your emotions? How did it work? How did it feel when you got stomped out of this position? Did you want to get right back in to make that 25
No?
pips again? I mean, how did you feel? Can you please
Okay.
share with us?
Yeah, sure. Pretty simply, I was pretty happy. Looked at it and I thought, you know what? I only lost 25 pips. Someone there is losing over 100 pips.
Wow, so you actually you see guys, you see how Mandeep is controlling his emotions. Very crucial. Going back to lesson three, the psychology
Yeah,
aspect of it. He actually just said something that I don't think very many people would say. He was actually happy because at the end, if you look at this, those who would have extended their stop losses, like you mentioned, 100 plus pips, but he's out and now he's sitting comfortably at his chair, waiting for the next at home in front of the
yeah,
computer, waiting for the next opportunity.
yeah. And the thing about trading is it's a game that's been here before we were here, and it will be here once we've gone as well. And you have to appreciate that because the day you learn that, that will be the day you start making decisions based on your trading strategy, based on your trading plan, rather than your emotions. The way I look at it is that I want to keep bullets in my gun so I can come shoot the market again tomorrow. If I just use all my bullets, all my money up today, what I'm going to do tomorrow is just look at empty charts. I've got nothing to do. So one of the things you should consider before you actually enter the market is where you're going to enter the market, how much is your stop loss, how much are you looking to risk at the market, how much are you looking to make from the market. Because when you come and take in a trade, that's when your emotions kick in, not when you're looking to take the trade. What people say to me, oh yeah, I planned a stop loss of 30 pips. Yeah, you planned a stop loss, but did you use a stop loss of 30 pips? And then someone says, well, I was looking to take 80 pips. The market moved 100 pips in your favor. Why didn't you take it then? Oh, because I thought it's going to carry on moving forward. Well, it didn't. It came back, gave you 80 pips, and it came back against you. You're now out with your stop loss taken out. I'm sure, Nimi, you've probably seen that happen. Market moves in people's favor, but they don't know where to get out of the market.
Amazingly, and please, guys, our viewers, don't take this the wrong way. Amazingly, how greediness can really hurt you at the end. As Mandeep said, you set yourself a strategy. You set yourself a take profit of 80 pips. The
Yeah,
market starts moving towards that way. Why are you not sticking to your guns? Why is that? And once again, it's the fact that you're allowing your emotions to
yeah,
control your trading. And like I said, I want to to go back, if you are that type of trader where you don't know where to get out at profit, or you don't know when to get out with the stop loss, and you continue to adjust it, please go back to lesson 3, the psychology of trading, and review that lesson. It's crucial.
Yeah. Okay, guys, and I just want to share two more things on this trade before I finish off. Now, the other thing is, as you can see, I got taken out with 25 pips, but then we have another demand level here, which is a support, and I got filled on this demand level as well. And at the moment, I'm currently in this trade in profit. So you can see I've already made my 25 pips back from this demand level here. So rather than moving my stop loss down, 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 all I did was put another order here, and I got filled on that order just over there. And I think it's given me about 75. So it's already given me about 33 to 1 risk to reward. Nimi, what do you think of that trade? You know, I had an order sitting there, and I got taken up with 25 pip stop loss, and then I got filled on this order here. I think I got filled on the same day yesterday, and I'm currently in that trade with no risk. I've moved my stop loss to my entry, and it's in favor of 2 to 1. I think.
I think you might be. I think you might know what you're doing.
Yeah, so no, guys. At the end of the day, it's you know, we're having a laugh and joke about it, but you can see the power of stop loss. So if you got taken out with 25 pips, don't worry about it. Look, there's another demand level here. There's another support level. Put your order there, and you got filled. Take your 25 pips. You're not broken even for the day, and you was looking to make 4 to 1. You've gone home without losing any money in the market. You should be happy with that. And think that's, you know, it's one of the most crucial things in trading. People get upset because they're not making money, but don't be upset. Only be upset if you're losing money. If you're breaking even, you're going in the right path. One day or another, the market will start to pay you. So follow your rules. My rules were on this. Okay, where is my entry? Where is my stop? Where is my first target? Where is my second target? Now, someone who wants to stay in the market for longer, let me give you a little tip here. What you could have done is you could have opened 3 small positions. You could have put in 3 small orders and opened your 3 positions here, and you could take off one position at 33%, second position at 66, and third position at 99% of the move. Or what you could do is get filled here, and once your second target is hit, leave about 10% of your position running, but move your stop loss to entry. So you're now in the market for free, and let the market carry on moving up if it's going to move up that way. And that way, you can never kick yourself for getting out the market if the market's carried on moving in your favor. Did that make sense, Nimi?
Absolutely, absolutely. I think if our viewers truly understood what you just said here, then they recognize that once again, working with a stop loss is most crucial. And at times, it's okay to be stopped out on your position due to stop loss. This is what it's for, there, guys. Stop losses is not here just to say we have stop losses and take profits. It's there to actually help you to save you from actually losing more funds than you intended to.
Yeah, exactly. And the thing about it is, there is no point in having a set of rules if you're not going to follow them. So your rules should tell you anyway what and where your stop loss should go, and that's all you should stick to. If anyone's telling you, oh, you should move your stop loss if the market starts moving in your favor, they're telling you wrong. Don't move your stop loss. Look to re-enter the market another position. So if you do get taken out, don't worry about it. Look for another opportunity, because the market will carry on moving until, I don't know, until I've gone anyway. So we'll just say that for now. One of the other things I want to touch on is, when you look at trades on intraday basis, it's there are a couple of ways you can do it. You can either look at a 15-minute chart, you can look at a 30-minute chart, or you can look at an hourly chart. But I would always advise you try and follow the trend on the bigger picture. I always follow the trend on the daily chart, so that's why at the moment I'm not looking to take any shorts on euro dollar, because the bigger picture is showing me on the daily chart that this market is still trending up. Now, it's your personal choice, but that's just a tip I wanted to give you guys. Okay, Nimi, back to you.
Great. Well, guys, with that being said, I wanted myself to share something with you guys here. I've been watching gold closely as of lately. I'm a trader, investor of gold myself. So I just wanted to briefly just share something with you because I don't know if you guys have been noticing the ranges that gold has been trading within, and there's some really good opportunities. So just bear with me right now. Let me go ahead and just share. One moment, please. Here we go. Just bear with me.
And while Steam is doing that, guys, I just want to say that when you're drawing your support and resistance and also supply and demand levels, I will go through these after Nimi's gone through the gold chart because I want to touch on it for the ones who are struggling to draw their support and resistance line and show exactly how support and resistance works and how supply and demand works. They are similar, but they're not the same. So please don't confuse yourself with supply and demand and support resistance. Well, for now, we'll just go into the gold chart with Nimi. And
Sorry, guys. Just having a little issue here with the share screen.
no, that's no problem, Nimi. That's fine. Okay, guys, whilst Nimi doing that, I can actually share my chart to show you a bit about the support and resistance. So, as you can see, this is a USD JPY chart. So what we are looking at is a market which is trending up. So what I will be looking to do is buy or go long on this market. Now, support resistance is pretty simple. Resistance is where the market is turning back from, and support is where the market is moving up from. Now, when one gets broken by another, the market often uses it as a bouncing point. Now, I'll show you an example of this. If we look here, this area here was resistance because the market came here and moved on. Now, what you would have been looking to do is go longer because the trend on the daily chart is up. So simply, this is my resistance line. So this is what we call resistance because the market moved down. Now, once this resistance got broken, look what the market did. The market came back to the resistance line, but now used it as a bouncing point to move up. So when the market comes back to this level, it now uses as a support to go back up again. So now this line becomes support. So simply to draw support and resistance lines, it's all you have to do is find an area where the market moved down from, and that is your resistance. And look for where the market moved up from. So, for example, this area now is support. This area here is support. That area there on the top is resistance. So, support and resistance is pretty simple. Resistance lines are where the market moved down from, and support lines where the market moved up from. Those are very, very simple ways of explaining support and resistance. Obviously, in order to go into support and resistance, we would need to spend a whole lesson on that. So in future, I think we will come back to explain support and resistance lines in a lot more depth. But for now, I just wanted to obviously show you and take into account that when the market moves down, that's resistance. Where the market moves up from is support. And whenever or resistance gets broken, it usually uses it in the opposite direction. So one of the ways you could have traded this yen currency is that, say, the market is moving up and you're looking to go long. We've seen resistance here. The market broke up above the resistance. You could have drawn your line there and then put your orders in to say, okay, when the market moves back into that line again, I'll be looking to go long. And surely you would have been in a lot of profit by now. Nimi, have you got your screen sorted?
Yeah, but real quick, while we are on the subject, I like to keep it it's very simple as well. I like to use three simple rules to draw support and resistance. Number one, I like to see that the market needs to reject that level at least twice, not once but twice.
Yeah.
Number two, the more rejections the level has, I
Hmm.
think the more important that level becomes.
Of
And
course,
the
yeah.
last, I think that the most recent rejections on the level are a bit more important than less recent.
Yeah.
Especially depending on what types of trades you're looking to get into. With
Yeah.
that being said, I wanted to ask you just a couple of questions. One of them being in regards to support and resistance.
Uh-huh.
I do know that some of my clients, some traders, actually use a moving average
Hmm.
to guide them where the support and resistance is. What do you think
Hmm.
about those traders that trade in that way?
Yeah, no problem at all. I mean, the thing about daily charts and weekly charts is that sometimes you have charts where the price is moving above any other levels that's ever been to before. So in areas like that where you don't have a previous support or resistance to use, you can use. I use the 8-day and 21-day EMA. I'm not sure which one you use, Nimi, but those are usually mine. And when the price moves back into the two EMAs, I usually look for the support or resistance, but I would always follow the trend with the moving average. So I would never go against the trend, regardless of what the moving averages are telling me. But yeah, by all means, you can use the support and resistance off the moving average as well.
Okay, great. Last question here. In regards to support and resistance,
Hmm.
what do you feel about round numbers as far as posting your support and resistance
Stay away from them.
at round numbers? So you think those who trade strictly on round numbers should definitely stay away from that type of strategy?
Yeah, what I always tend to do is never put my stop loss near a round number and never put my entry near a round number. Because round numbers is more of a psychological thing for a lot of people. Simply, it's changing now as we are moving more and more towards computerized trading. But there are people still out there with big positions who actually ring up their broker. And I've actually spoken to a couple of guys, and these guys trade positions of like, nearly with a 10, $20 million in their account. And they say to me, when I asked them a simple question. I said, when you put a stop loss or when you phone your broker, how do you, what do you what price what kind of prices do you give them? And they said, well, if say for example the price is at 1493, we would just say 1500. It's
I see.
it's yeah, and so it's a psychological game as well, and that's why I tend to stay away from round numbers. I always tend to go up about 5 pips above or 5 pips below. So that's my view on round numbers.
Okay, great. So guys, you heard those who do trade strictly on round numbers. You got Mandy's opinion about it. With that being said, let me just quickly share my chart here. Sorry about the
Hmm.
delay there earlier. Mandeep, are you able to see the chart?
Yeah, yeah,
Okay,
perfect.
guys, before we even begin, please, I want to make it very clear. I'm not giving you any advice on this. I'm not recommending or suggesting by any means that you should trade gold. I just wanted for those traders out there who do trade gold and maybe have not recognized this to show you what's been happening as of lately with gold. Now, you can see we're looking at a gold chart, 60 minutes. And Mandeep and I actually spoke about this the other day. Gold has been doing amazing things as of lately. We have been seeing gold pretty much trading within 1700 to 1640, and we've been trading within $20 ranges. We've been trading between 1640, 1660,
Hmm.
1660 to 1680, and 1680 to 1700. And we saw not too long ago we tried to test the 1700 level. We did not break it. So let me just put in a couple of horizontal lines here to show you what gold has been doing as of lately. Let's put a line here, and let's go ahead and put another one right here, just to show you. You can see where we are with the prices. We're here at 1685
Hmm.
and down here at 1666, roughly right around $20. And we can take, for example, another horizontal line, draw it and put it at this level right here.
Give me any chance you can zoom in a bit on the chart.
Sure, let me take one moment. Let me just place this in. Let's take a look. Does that look any better?
Yeah, that's perfect. Yeah.
Okay. So you saw before we were right at 1685 there. We were trading between that and 1666. You can see the top of the candle here, the lower end of the candle. Now here I'll have to just adjust since we zoomed in. We can see another key level here at 1682.
Yeah.
And when we take it down here, we can see that it was trading all the way down to 1663. So once again, you can see within the $20 ranges. Now, why am I showing this, guys? Because there's a lot of opportunity right now with trading gold. Until we can break the key level of 1700, which will lead us to the upside towards 1750 and even 1800. Right now, it's a great opportunities to be trading within these ranges. As I mentioned, I'm not giving you any advice or suggestion by any means that you should go in right now to your web trader and start opening up positions trading within the $20 ranges. I just wanted to show you that as Mandeep spoke about as well, you know, there's great opportunities in these markets. You can see what opportunities Mandeep took with his euro-dollar position. He even mentioned to you guys, he got stopped out. He didn't let that discourage him. He got right back in, and as he mentioned, he's currently in an open position, making some profits. So just wanted to briefly share that with you guys. Okay.
Perfect.
So Mandeep, anything else that you'd like to share with our viewers for today before we end the session?
I think we're done for teaching. So I just wanted to talk generally about the course. As you guys know, we've been doing this for 6 weeks now, and this is our seventh hangout because the first hangout was just an introduction one. So I just want to thank everyone who's followed us, and hopefully you guys learned something. And it's been a pleasure working with eToro. And unfortunately, Iona's not here with us today. But guys, we've got some great news for you because from next week, what we decided to do, we're going to do a market summary and also a brief lesson or something every week on Wednesdays. So what we're deciding is that every Wednesday we will do a short hangout in which we will do a recap of the market. So we would probably do a recap on gold and probably some of the majors. Every week we were trying to pick a different market and give our opinion as to what we think where the market is moving and what is happening. We won't give you any trades to take, but however, we will give our guidance as to which way the market is moving. Nimi, is that what we're looking to do?
Yes, Mandeep, guys, very excited about it. We're going to continue this on. We're going to be doing a weekly review, as Mandeep said, every week on Wednesday, 10 GMT time. We will be hosting hangouts, as Mandeep said, discussing different instruments, different opportunities in the market. We're not going to give you any trading advice on what trades to take, but we will be reviewing the markets overall. So we will, you know, you can go either to my wall at Nimi H eToro or Mandeep as well at Mandeep Athwal, and we will be posting the links on there, as well as we will have it on eToro's main YouTube page. And with that being said, guys, I want to thank everyone who has joined us over this course, over the 7-week course. I want to thank everybody for all your positive comments and feedbacks. It's been a pleasure working with Mandeep, and I truly look forward to continue working with you, and for you to work not only with myself, but eToro as well as a partner. With that being said, guys, once again, thank you. Have a wonderful and amazing weekend. And I look forward to seeing all of you Wednesdays from this point on, Wednesdays at 10 GMT time. With that being said, Mandeep, once again, thank you so much for all your time and effort, your knowledge and experience.
No problem.
And with that being said, guys, have a wonderful weekend. We'll catch you next week. Take care,
Okay,
guys.
guys. See you later.
Bye bye.
Bye.